The MBI.com. This is John Sports for the ninth. Well, and here it is. We're still at the exact same 4008, and again, this is part of that just weighted average moving back below. I believe that we were looking for any opportunity for buyers to jump in because of the need for Santa rally, though they were facing some headwinds with the MBI white leading in that, and frankly still are. Not a whole lot has changed enough to make it significant. The biggest move would be DOC red improvement, and then a slight improvement from the shakeout, but it's still below yellow, so there's nothing sustainable at this particular stage, albeit slight improvement. I think we have magenta now, 1033, just over the nine, yellow at 976. So you got a turnaround with MBI white leading, and I mean, a solid increase from DOC Steel, which is short-term buyers as well as long-term buyers. Mid-term buyers is not in the action at this particular stage. I think that's just because long-term, you got the funds that are either having to end out years, year end, and or pre-position for the beginning of next, and of course, short-term buyers with the limited liquidity. They're the only thing keeping the market where it's at, because there really isn't a whole lot of action happening. From the NQ standpoint, it's literally identical. I like that. Dropping orange is rather bullish situation. It's got to continue. Any pivot up of that orange, though, before on the DOC here, before you get a move back up of DOC red above 13, and that would not be a positive. And I think that you would see much broader sell down. And of course, here, bond market still predicting in what I would view as an apocalyptic rate situation where you're having serious economic problems, forcing the Fed to cut rates significantly because all the um, increases in rates that took place during all of September and October literally been wiped out here just in a couple of weeks, which very unusual. So they're expecting, the Fed to have to switch course as opposed to what the Fed says they're going to do. Is the bond market wrong often? Not usually. Does that mean the Fed is just, going around with blinders on? Potentially, but not so much. It could just be a very big misread because I really think the Fed is serious about maintaining rates where they're at and trying to normalize that function because otherwise they have no weapons in the future for anything. And I think that we're seeing that quiet quantitative easing that they do outside of U.S. parameters, sort of like what we witnessed with the euro and supporting dollar liquidity overseas directly. And I think that has eased a lot of the different pressures that we see out there, which is why oil continuing to drop. Because again, if you're able to see a big portion of it is now being traded outside of U.S. dollars, and that has a significant impact. The real issue is where's this extra supply coming from, and what happened to the demand. So it's a real interesting question that don't quite have any answer to just yet, but I think we'll start to see it in economic numbers at least. It should start to represent itself if it's not just a massive supply increase. So we'll see. And gold hasn't abated, which means the gold market is really not buying the interest rate reversal with TLT rising and rates going down. And the euro continuing its plug upward, not for any growth aspects, just for the fact that unlimited supply of US dollars means there's less pressure on the euro, at least to transfer to energy costs. Now, of course, the cold front's just starting to plow in, but because we had very mild fall for the most part, other than just the beginning now, really the stockpiles were able to stay full. Now, how big a drawdown will they get when these latest cold fronts, and if they're frequent cold fronts, it's too hard to predict that right now, but it certainly would have a draining effect. I think that they're fine for this year, so they're going to make it through the winter without the crisis that potentially could have unfolded if it had been a little colder earlier. So that's a huge reprieve. Bitcoin seeing a little bit of action back up to the 17 handle. Um, just no real short activity at all. It's still barely 11.8 for the shakeout. So it's above negative 13.5, just barely, and making some slow improvements. Get that orange dip at 50%. That would be your blowout move to back up over the 20 range. From an ETH standpoint, it's already got the magenta over yellow and the orange dip already taking place. So ETH looking better from that standpoint, even though it's slightly weaker from a Fibonacci setup. The improvement has been steady, and you get that double move from a DOC, creating a P2 pivot at just the right moments. So that all looks good for me. By configuration, look at that. That's the day. That was it. That's not even worth talking about. Likewise, 5K. What do you want to say to that? That was like no activity at all. So a little strange that kind of absence in such a broad market can be problematic, because if something were to trigger, there wouldn't be enough liquidity to stop it. So cross your fingers that there's no international event or something, because that certainly would not bode well, because there just wouldn't be enough on the other side to handle the trade. So it's kind of a precarious thing when you see that, because there's just no other reason for it. Regardless, slight sell signal right at this particular stage. There's really nothing else to add to that. This is not even enough action to make any sense of anything. So we'll leave it at that for now. But overall, we're still just waiting for some economic confirmation as to whether or not it's believable that the economy is still in flux, or if we're headed for this hard stop that bond market's kind of suggesting. Anyway, we'll talk later. Have a good one. Trade well.